Eddie Ghabour with us now. All right, Eddie, are you still selling any and all rallies?
Stuart, we absolutely have, as you well know, and this is exactly why we wanted to come in the second quarter earnings season with the largest cash position we've had for the year. Because now, look, this Fed is no longer, this whole pivoting, the Fed pivoting narrative needs to go away. They're going to go 75 basis points. You may even hear 1% narrative coming in the next week or so for this month, probably 75 for September, on top of a dollar that continues to strengthen, which is only going to hurt the second quarter earnings outlook even further. So you got a perfect storm here in the near term. So we think we're going to get one more downdraft here, test the June lows, probably go a little bit lower. And then we're finally going to start putting our cash to work for clients because we think we're going to bottom out sometime between the fourth quarter and first quarter next year in the market. Even though the economy will still be extremely weak and we'll probably be in a recession next year, the market will bottom well before the economy starts to recover. So we're close, but we're going to be patient for this next downdraft that we've been telegraphing with your viewers.
Why are you so convinced that the Federal Reserve will not pivot? After all, there's considerable damage going to be done to the financial markets and to the economy. The pressure will be on them to, hey, lighten up a little bit, lighten up. And you're convinced that they will not do it? Why?
Well, how can they lighten up when we just got a print that's at a 40-year high? They're going to lose all credibility if they take their eye off the inflation area, okay? Because now it's going to look as though they're trying to protect the stock market and not the everyday hardworking Americans. And that's the dilemma they're in. But they put themselves in this position by not tightening last year. And so now they have to play catch up. And in typical fashion, they're going to tighten too much, too fast. And this is why we're going to have a recession. And I think we're in one now, and it's going to show next year because the demand destruction that we are seeing, you're seeing housing starting to roll over as well, too. So the writing is on the wall, and the Fed is just late to the game.
Okay, let me summarize. Market continues to go down. There's another leg down coming when the Fed starts raising rates even more aggressively. You hit bottom in the fourth quarter of this year or roughly there, and that's when you guys start buying. Is that what you're looking at?
Yes, and we're going to dollar cost average, Stuart. We're not going to be able to predict the bottom. Nobody can. So we're going to be dollar cost averaging going into the fourth quarter and into the first quarter because we think we're going to get some amazing buying opportunities both in the debt markets as well as in the equity markets.
Okay. All right, Eddie. We'll let you off with that. We'll see you again next week. Thanks very much indeed.
Thank you.